Hey, what's up, everybody? Welcome back to the mind-blowing video series of tips, tricks, strategies, and hacks for your income taxes. My name is Tyrone Gregory, the peoplepreneur and founder of the actionfromsquare1.com website, and I am going to be your guide through the fourth video in this series. And this video series is dedicated all to the self-employed. And the reason they have their own video is because in order for this group of individuals to achieve that perfect tax return, there are a few extra steps that they must consider. If not, they're going to be caught off guard. But before we get into the details, let me explain exactly who are the self-employed. Well, they are a group of individuals who are considered to be independent contractors because they don't necessarily have one employer or a boss. They work for themselves. They are independent. They perform various tasks, perform various projects, and once those things are completed, they get paid. And with the introduction of the internet and social media, we also have a new group of independent contractors that we like to call social mediapreneurs. And I love these guys because they're doing a great thing online, generating what we call passive income. But for purposes of this video, there are two types that I want to identify and speak to, the two types of the self-employed. And they are those who are self-employed on purpose and those who are self-employed by accident. But let me explain those who are self-employed on purpose. Those guys are the serial entrepreneurs. They know exactly what it is they're doing. They made a choice. They said, I don't want to have a boss. I'm going to go out here and I am going to be in charge of everything that I do. They're operating without a safety net. They're innovators. They're doing everything on their own. They are the leaders. They are the managers. They are self. It is only them. And they are doing this on purpose. It is a choice versus those who are by accident, meaning that they have no clue that they are self-employed. They just receive a 1099 miscellaneous at the end of the year, which also means that they are not prepared for what it means to be self-employed for tax purposes. And you'll know if you're by accident, if you're going to a job daily, getting paid, but not receiving a paycheck stub. Or same scenario, going to a job daily, but you're not having any taxes withheld. That's when you're self-employed by accident. But in either case, whether you're self-employed on purpose or by accident, this video is going to help you file that perfect tax return. But first things first, just like as a regular employee, you're going to have to determine your taxable income and get to your taxes and everything that we've discussed so far. However, for the self-employed, is slightly different because it's not the gross income that you're going to start with, it's your net. And here's the formula for determining your net income as a self-employed individual. You're going to take your gross income minus your expenses, and then you arrive at your net income. And that is the starting point for determining your taxable income. And for gross income purposes, a lot of times self-employed individuals will receive this form, the 1099 miscellaneous. This is probably one of the biggest identifiers for those who are self-employed. But note that not all the time as self-employed will you receive a 1099 because not everybody reports the income that they pay you. But this is one of the biggest indicators. And more importantly, if income is reported in box 7 of this 1099, notice it says non-employee compensation, right? So that is what determines whether you're considered self-employed or not. And by the way, if you feel that you received this form by accident, meaning that you feel you should have received the W-2 as opposed to a 1099 miscellaneous, I highly suggest that you go speak to your tax professional or shoot me an email because there's some things that you may need to do. But anyway, this is what is going to be reported for as far as gross income. But now let's talk about your expenses. You know, there's an old saying that says it takes money to make money. And as a entrepreneur, as a serial entrepreneur, a self-employed individual, you know that all too well to be true, right? As an independent contractor, you are going to spend some money to make some money, and the money that is spent has to be taken into account. Let me give you an example. Let's say as a self-employed individual, you earned $75,000 for that tax year. And in order to earn that $75,000, you spent $25,000. That could have been communication, supplies, rent, whatever. So once you deduct the 25 from the 75 that you spent, your net income is $50,000. And that's what you're going to use to determine what's taxable. That's the starting point. Right now, you can start from the same place as a regular W-2 employee. So, expenses. When it comes to the self-employed, I hear this a lot. Well, what expenses can you deduct? And if you are self-employed and you're not quite sure what expenses you can deduct, I highly suggest that you go to the irs.gov and download yourself a copy of a Schedule C. Now, here's a Schedule C, just Part 2 only. And this is the part that has all of the expenses that a self-employed individual are allowed. You can see advertising, car and truck expenses, depreciation, insurance, mortgage. Over here, your office expenses, if you rent vehicles or, repair supplies. Every type of expense that's deductible for the self-employed is here. Now, if you need to know what expenses fall in what categories, that's where, like I said, I will go talk to your tax professional, shoot me an email or something. Maybe I can see, about helping you out. But just to get a general idea, download a copy of the Schedule C and you'll know exactly what expenses that you could go to. Okay. All right. So now we've arrived at your taxable income. Everything else from here on out is the same, with the exception of that the self-employed has to worry about an additional tax called the self-employment tax. And you may be asking, well, what is it? The self-employment tax is a tax that's 15.3% of any self-employment income over $400. And this tax is not added to any other income except self-employment, meaning that if you are a W-2 employee and self-employed, this will not be added to anything except for the amount that is earned under the self-employment. But let's break down that 15.3%. It is Social Security tax of 12.4% and Medicare tax of 2.9%. It's the same exact as a W-2 employee. That's why I don't like to call the self-employment tax an additional tax, because it's not additional. It's the same exact as if you were a W-2 employee. And let's look at this example. Remember from, I do believe, the first video, we looked at this pay stub and there was current earnings of $19.20 here. And then there we went over to the taxes where we looked at the federal taxes. But now we'll see here the federal, which is the MED, is the Medicare tax, and then the federal Social Security. I know it says OASDI, which is for Old Age Survivor Disability Insurance, but that's just a long word for Social Security. So you'll see, even as a W-2 employee, they also pay that tax. Now, I know some of you are jumping ahead and doing the math to see if that amount is 15.3% of the 1920. And I'm just going to tell you right now, it isn't. As a W-2 employee, we're only responsible for half of those taxes. Whereas as self-employed, you're responsible for the full amount. But don't worry, don't say it's not fair, because even as a self-employed individual, you still get credit for half. Okay. And to figure out your self-employment taxes, you can start to go to that process of receiving the perfect return. It's figured on a form Schedule SE. Again, this can be found on irs.gov. Just type in Schedule SC and you will see this form here. Of course, this is just a snapshot of the sections. I think it's about a 2-page form, but this is for 90% of the people who are self-employed will focus on this form here. And as you can see, it's a very simple form, only six lines there. And as a matter of fact, you're only going to use probably about 5 lines unless you're Old MacDonald and you have a farm. Lines 1A and 1B don't necessarily apply to you. You'll start here at line 2. And you'll go through and just read the lines, do the math. Very simple. But remember, I said you get a credit for half. As you can see here on line 6, is going to be a deduction for 1/2 as you will multiply it by 5 and enter it in as an adjustment. So everything pretty much balanced out. But let's take a look at the 1040 real quick. So this is our starting point. Once you've determined your net amount, you're going to put it here on line 12 where it says your business income. Then remember, we just figure out the deductible part of the Social Security, self-employment tax. That's going to go here on line 27. And then here we are, line 43. You're still going to go through the same steps as before to arrive at your taxable income. The only difference is once you have figured out your tax, you're now going to have to figure out your self-employment tax. So now that you've done all that, you get to pick a method. Pick the method that you're going to use to determine your tax liability, either the brackets or the look it up. The only exception to this for the self-employed is the fact that once you've chosen the method, there's no W-4 for the self-employed to fill out. They can only do quarterly estimated payments only. They don't fill out a W-4 because there's no employer withholding anything. And remember, the formula for the quarterly estimated payments is you determine your tax liability divided by 4, which is going to give you the number of payments. So, of course, example. Let's go to an example. So here is Brian. Brian is single. His net, meaning that we've already figured out expenses and everything, was $75,000. And of course, his pay frequency is going to be those based on the quarterly estimated payments. And Brian still has the same goal, to file that perfect tax return. Especially as a self-employed, he does not want to pay more than he should. He wants to pay only what he needs to pay and be done. So going through the motions, we've determined that his tax liability is $10,650. But remember, we're going to have to add his self-employment tax, which we've determined was $10,597. So with those two being added together, he has a total tax liability of $21,247. Okay. So because his quarterly estimated payment is 4 times a year, so this becomes the formula. We're going to take that $21,247 divided by 4, which is going to give us his payments. Remember, 4 equal payments. So the first one is $5,311.75 to be made on April 15th. That's the first payment. The second one, the same amount, due on June 15th. Third one, same amount, due on September 15th. And his final payment, the same amount, due on January 15th of the following year. As you can see, very simple. Just a few extra steps only for the self-employed. And so here we are, the conclusion. And there it is for my self-employed folks. Same as a W-2 with the exception of those 2 extra steps. Determining your gross income, determining your net income, then determine your taxable income, figure out your self-employment tax, add those 2 individuals together, and then you have your total tax liability, and now you start the method. So, of course, homework. You know I love giving you homework. Trust me, I know as an entrepreneur, There's already a lot on your plate, especially if you don't have a team in place. I know that you are the manager. I know you are the sales rep. I know that you are the customer service. I know that you are the marketing. And now, yes, I'm asking you to be the accountant. And the reason that is because so many businesses fail within the first couple of years of operation. And 90% of that failure is a result, of poor financial planning. Therefore, I want you to be 100% ready for your finances. So this is your homework. Play around with the numbers as always. Try to figure out, estimate as much as you can as to what you think your income is going to be, and go ahead and start figuring out how much you need to pay and get those quarterly estimated payments in. And of always, if you need me, you can find me on social media. Shoot me an email, send me a tweet, leave a message on Facebook, leave a message in the comments below, or find me somehow, some way, I don't know. And make sure you continue to subscribe to the channel, and we'll go from there. Have a good one.